Now, states across the country, they're all facing budget shortfalls and lower tax revenues in some cases. Many of them then looking to private industry to invest in and to maintain and also develop key infrastructure projects. My next guest sees opportunity there for investors. Mark Weisdorf is the Chief Executive of Infrastructure Investments at JPMorgan Asset Management. Mark, good to have you with us on Bloomberg. Thanks so much for coming in. Explain for those that are not familiar with the idea of investing in infrastructure. This is an actual piece of the society, whether it is a toll road, an airport, or maybe even a pipeline of some kind. Explain the parameters of what qualifies as infrastructure now.
Well, and investors are very interested in infrastructure assets. You're right. They involve regulated utilities, water, wastewater, electricity, gas, and also transportation assets like airports, toll roads, seaports. These are essential assets, and investors are interested in them because they offer relatively predictable, low volatility, growing cash flows. They also, because they're monopolistic assets, they offer a lot of protection against the economic cycle, against recessions and downturns, relatively recession resistant. And interestingly, for those that are concerned about inflation, they often offer inflation protection characteristics. Now, it's a great time right now because investors who are concerned about the volatility they've experienced over the last 2 or 3 years in the equity markets see low volatility, growing cash flows that infrastructure assets offer as being very attractive, relatively recession resistant again. And also, those that are concerned about inflation, governments printing money or commodity price inflation, are very interested in the inflation protection characteristics of these assets.
Now, what is the history, the context for these infrastructure projects coming onto the market? Because in the United States particularly, we have a history that infrastructure such as railroad bridges, toll roads, airports, they're not privately owned. They're usually owned by a regional authority. You can loan them money in terms of buying their bonds, but owning the equity piece, that seems like a relatively new proposition here.
Well, it really varies from subsector to subsector. Of course, regulated electricity companies, there's many of those that are operated in the private sector and then regulated. But you're absolutely right. In the toll roads, airports, less private sector involvement. But why are they now becoming available for investment? Well, as you said earlier, governments are suffering from lower tax revenues and increasing massive investment required to upgrade infrastructure, to grow infrastructure, to properly maintain it. You know, the American Society of Civil Engineers produces a report card every 2 years on the state of American infrastructure. And the last report card they gave us about a year and a half ago gave us a grade of D. Now, that's a very poor grade. They estimate that $2.2 trillion is required to be invested in infrastructure in the United States just to bring it up to a safe standard. This isn't to bring the newest technology, the most productive new approaches to building infrastructure. This is just to bring our existing infrastructure into a safe standard. The same problem exists in Europe and in Asia, where we're living through the most massive urbanization, industrialization that the world has ever witnessed over the next 2 decades. They need a great deal of new infrastructure as populations move to the cities. And the estimates are for $8 trillion of investment required in China, in India, in Southeast Asia over the next decade.
Well, let's just use them as an example. How do the governments in India, in China, actually build these infrastructure projects? Do they go to the private market, or do they want to still maintain ownership control?
They do both. They obviously do have stimulus packages like we had 2 or 3 years ago, and the Chinese government, the Indian government have made much capital available, but they've also changed rules and regulations and traveled around the world to attract capital to invest. So they want to do it in a public-private partnership type way. Their needs are so massive, they feel they can't do it on their own.
Now, one of the things we did talk about, though, is when you look to purchase an equity stake in one of these infrastructure projects, or maybe a portfolio of these projects, you do need to find out exactly what they're worth. At least you need to satisfy yourself, because just looking at the current yield, whatever the cash that's spun off, you have to do your homework.
It's critical. No two assets are alike. You have to understand the demand dynamics for that asset, the demographics, socioeconomics, and you ultimately have to predict what usage of that asset will be over the next 20, 30, 40 years. Of course, because these are monopolies, or at least have monopolistic characteristics, we think it's very doable to have a very high confidence level of what future cash flows will be. Having done your homework, absolutely, you have to pay a price that's appropriate for the economic sensitivity that that asset exhibits.
Time for the last question for you, Mark, which is, if you turn a lot of these infrastructure projects into privately owned enterprises, is there a way to ensure that those private companies will continue to put money into them to maintain the level of service, the level of quality?
Absolutely. These assets are so essential to the economic productivity of any community that they are always regulated. They're either regulated by a regulatory commission that takes into account the cost of maintenance, capital, and so on, and that's where your regulators for your electricity, your water, and your gas, or they're regulated by way of a concession agreement that's hundreds of pages of long that defines how much capital needs to be invested and how much you can charge for that service.
All right, I want to thank you very much. Mark Weisdorf coming to us from JPMorgan Infrastructure Investments, sharing some thoughts about new ways to allocate capital.